Welcome to this special episode of Real Estate Chat with Robert Eid and Johnder Perez. Robert, do you know why this is a special episode?
Because it's my birthday?
It could be your birthday, but it's a different kind of birthday. In your own terminology, the anniversarying out of the February 2022 peak real estate market. So in today's episode of Real Estate Chat, Robert will go through various charts and graphs and stats and figures talking about the prediction for, or forecast rather, I should use the word forecast, for February 2023 prices, how they look compared to 2022, and where prices are going. If you're watching this and you're not subscribed yet, please click subscribe. If you like this video, at the end of it, click like. If you don't like it, click dislike. And make sure you type into the comments and tell us what you think the February 2023 price will be, how much of a difference it'll be to compared to last year. Robert, let me load up these charts for you, and then you can take it away. Go for it.
Sure.
Absolutely. My mistake. Hold on. Technical errors. Okay, hold on. Robert, let's load up these charts, and you can take it away.
Okay. Trying to predict price without knowing what every single sale is kind of a mug's game. But what you have to do is find a precedent and then play with it. So what I did was I looked back and the difference between a January and a February for 22 years. Why 22 years? Because that's 1996. And the real estate market kicked out of the doldrums in 1996, and it's been on a solid tear up ever since then. So every year since 1996, the real estate market went up between February and January, and the average of that was 6.02%. Now, to think that the market's going to go up this year by 6.02% is really hoping for too much, because nothing's gone up by 6%. So if we say, what's the trend been for the last, since the peak, you come up with an average of minus 2.02. So that was the worst, that's the best. Let's take the average. So the average is plus 2%. Now, plus 2% gives us 1,059,442, which is almost the same as last month and almost the same as 2 years ago. And it's a change of about 20% from peak. And I bet you that's where it is. My most optimistic is 1.1 and change, and my least optimistic is 1.017 with 159 in the middle, 1059 in the middle. So we're going to say that flat, and flat is the new up. And so our price, and the next one is indicated with that average of 2.0. And you see the big starry worries. The number on the way top, red dot on top of a blue line, is that's where it was a year ago, and that was up 27% from the year before. So here we are, just about flat at 1059. And if we look in this little purple box, brownish box, over 2 million, there are some sales. It's not that much different from the long-term average. So I'd say it's a typical January. Oh, you know what? That should have been changed to February. What a boo-boo. Okay, I'll fix that. But we can't fix it now. Okay, so here's sales. Sales, we had a very good weekend, and we went from being the 24th best February to being the 23rd best February. And now I'm predicting, instead of 4,300 sales, 4,500. But it still throws into the same category of being about 36 to 38% up below the 5 and 10 year average, and 50 to 60% off a hot market. So it's not bad. It's not good. If you want to see what bad is, you look at that very worst April that happened in the lockdown, because, but you know, property still did sell in the worst of times. And the next month wasn't better at 4,000. So that's about where we are, but that's May, and right now we're February. The market does go through a certain seasonality. So I think you can expect to see prices flat and sales trudging along the same trajectory as they have been for the last 5 or 6 months. Now, not that that's bad, it's just not good. There are people who are hesitant to be buyers, people who are hesitant to be sellers because of the opposite reason. The seller thinks there might be more money available if they wait. And the buyer says there might be lower payments for me and lower prices if I wait. And both of them are guessing that there's an inverse relationship between interest rates and prices. And if if interest rates came plowing down, the prices would go up, except we know that interest rates are probably going to go up first and more than we expect, and then come down very gradually. And so what we have to do as real estate practitioners in between times is make deals on financing. We have to do vendor take back financing. We have to buy down interest rates. We have to participate in the sale. We have to sell less than 100% of a home. And so that buyers can buy what they want to buy at a monthly payment they want to, they can afford, will qualify for, and we'll feel good about, that they don't have to actually time the very bottom, that we got it covered with their interest financing package. Okay, we looked at a couple of days ago, I guess, inventory. And inventory goes up and down, as you see. And so we're going to be somewhere short of 10,000 at 9,800, 9,900, which is right in line with where February's almost always are. So supply, demand, inventory is about where it normally is, a little bit too early in the year. And sales are less than what they normally are on the 10-year average. So what we've said time and time again, the real estate market starts on January the 15th. It was a little while ago. By February the 15th, we just passed that of whether we're going to be selling property at last year's price or at this year's price. Now, this year's price used to mean at a higher price than last year. This year, it means maybe lower price than last year, but so far it hasn't meant higher than last year. It maybe means the same price as last year. Then by March the 15th, which is going to be right smack in the middle of school break, we will know what's happening this year, and we'll be in the middle of it. And by April the 15th, which will be the weekend after the long weekend for Easter, we'll have our spring in full bloom, whatever it is. So if you were looking to buy a house, you are looking to only buy one. Doesn't matter what the rest of the market does. You're just trying to get a very good deal that suits you. And if you're looking to sell a house, it doesn't matter what the rest of the market, certainly not what's happening in Vancouver or Sudbury or Bracebridge or anywhere. What do you want to do with the money? And if you can get that money so that you can do what you want to do, you're away to the races.
And that's the most important thing, is understanding what you want to do with that money and what you want to do with the real estate market. And so our advice has always been, and we're going to keep repeating it, do what's right for you, do what's within your budget, make the right move, understand what market variables affect you in making this decision. Steady price growth, steady sales, seasonal, typically things pick up, as Robert's charts have always shown. And so there's no real surprises here. Of course, the media will sensationalize what's going on. Social media, well, that's a whole other show altogether. But
Yep.
If you're watching a real estate show and real estate chat and you like what you see, let me repeat that. If you're watching real estate chat and you like what you see, make sure you subscribe. Click on the like if you like, click on the dislike if you dislike. But either way, make sure you write in your comments with questions for Robert and myself. And if you have any ideas for any topics that you'd like us to cover in future episodes of Real Estate Chat, and if you have any articles that you'd like us to share and dissect, please feel free to share with us.
Excellent.
Thank you for watching this episode, Robert.
And we'll see you next time on
Bye
Real
for now.
Estate.
On Real Estate Chat. Bye for now.